G'day and kia ora everyone, my name is Sanjeev and welcome to the Engineered Investments channel. At the end of this video, you would have gained objective insights into Ansell, a product manufacturer listed on the Australian Stock Exchange. Looking at the establishment metrics, Ansell was established in 1905, or 116 years ago in Melbourne, initially as a condom manufacturing business by its founder, Eric Norman Ansell. Here's a fun fact. According to the Australian Dictionary of Biography, Eric Norman Ansell was born Adolphus Ansell on 6 December 1876 in Hoxton, London. He worked in the rubber industry before migrating to Australia in 1902, establishing the company 3 years later. In 1925, the company expanded into glove manufacturing, having divested their condoms business in 2017. Today, they solely focus on glove manufacturing, where they design and manufacture single and reusable gloves for a wide range of healthcare and industrial markets. Their head office has shifted away from Australia, with their core executive team residing in Belgium. They employ 14,000 people in 55 countries across Europe, North, South America, Asia, and of course Australia and New Zealand. And they currently rank 117 out of the 2,200 plus companies on the Australian Stock Exchange. Looking at the front metrics, and just a heads up, these figures are in Australian dollars, dividends have been paid continuously over the last 5 years, with the 2021 dividends in at $1.01, up by 30 cents per share from the previous year. In addition, there has been a steady increase in dividend payouts over the last 3 years. The share price has grown by 45.7% over the last 5 years. If you had purchased shares in November 2016 for $23.37, as of October 2021, your share price would have increased by this percentage to $34.06. The 2021 revenues increased from the previous year by $344 million to $2.697 billion. Ansell outlined this increase was underpinned by a combination of organic growth in their healthcare and industrial business units, up by 35% and 7% respectively, and favorable exchange rates during the financial year. Moving forward, the company's clear growth strategies set back in 2010, the three key ones being focus on business segments where Ansell can be number one or number two, expand into emerging markets, and investing in manufacturing of innovative products, which has positioned the company well in setting market pricing and remaining a leading player. The earnings before interest and tax increased by $179.9 million to $499.6 million, more than 1.5 times the earnings from 2019. The profits before tax landed in at $423.1 million, an increase of $128.2 million from 2020. Again, more than 1.5 times the profit they made in 2019. Looking at the shareholder metrics, the return on equity ratio has increased to 15.9%, a 4.5% increase from the previous year, indicating healthier profits are being maintained from the assets owned versus the previous year. The debt to equity ratio has remained significantly tucked under 70%, a value we use as a rule of thumb for consumer goods manufacturing companies to ensure shareholders' equity is not likely to be impacted if debt repayments were to drift upwards. The earnings before interest and tax margin, or EBIT, has increased to 16.67%, indicating profitability has improved when comparing pre- and post-tax profits. The gross margin has remained largely stable, indicating the business has scaled up nicely to increase revenues whilst keeping manufacturing costs in control. The profit after tax, or take-home pay, came in at $328.1 million, a $97 million increase from 2020. So what's the outlook? Well, the company's decision in 2019 to substantially increase manufacturing capacity has been rewarded by strong demand. The pandemic does explain some of this. However, the industrial segments that were hit hard last year due to the pandemic returned to growth. In saying this, the tailwinds of the last 2 years will ultimately subside as the crisis phase of the pandemic wanes. However, the Ansell of today has consolidated its position as a larger and more competitive leader in its chosen global markets. With this focus, Ansell is expected to continue with positive financial performance moving forward. In summary, dividends have been paid continuously over the last 5 years, with a steady increase in dividend payments over the last 3 years. The front metrics are good, with a $344 million increase in revenues from the previous year, though this may subside slightly when the markets return to a new stable. The shareholder metrics are suggesting excellent profits are being extracted using shareholder equity, in addition to ensuring lean manufacturing practices. These characteristics combined typically signal a high potential for stock investment. This brings us to the end of the video. Please do like and subscribe. Thank you for watching. See you next time. Ka kite anō.